exchange.
Hello and welcome to our special show this Diwali on hot commodities. Remember, we have seen a huge churn up in case of commodities in the last 1 year. I'm Manisha Gupta and we would like to begin by wishing all our viewers and guests a very happy Diwali. We have with us in studios here Vijay, who is from VSPL India, and we will get Kunal Shah and other guests from the global markets as well and get their expectations from Samvat 2071 and their views also on the year gone by. Vijay, hi, let's start with you first and a very happy Diwali to you. What is your sense really coming in for the gold and silver prices? Because the last 1 year really has been on a downslide. We have seen 18% of a cut coming into the Indian markets when it comes to the gold prices since last Diwali. How would you look at the prices now till next Diwali?
Happy Diwali to you, Manisha, and all our viewers watching the show. I'm not particularly gung-ho about bullion barring any geopolitical stress factors emanating from overseas. What you saw yesterday in Canada could be a precursor to more such action in other parts of the world, and that might just cushion the declines in gold and silver. I'm only talking about cushioning the declines. I'm not saying a hard bottom would be formed. Because in the second term of the US presidential election cycle, the midterm election of the second term of the president invariably sees a concerted action by the US authorities to drive down inflation, drive down crude and bullion prices, and thereby channeling money into higher risk assets like equity and real estate. Unless I see the midterm elections done and over with, I'm not expecting a hard bottom to be formed in either energy or bullion. And therefore, I think gold, silver and crude have some more way to go down. How much further down will they go will depend on how big the pullback will be. So I'm in no hurry to buy gold from this Diwali to next, or for that matter, silver and crude.
Fair point. That should get those yearly charts back on your screens, because the gold prices, while they have come down 10% since last year, take a look at the silver prices because they are a whopping 25% down since last Diwali to this Diwali. We have seen very sharp declines coming in for this one. Let's also get on board then Kunal Shah, and he joins us live from Nirmal Bang. Kunal, hi, happy Diwali to you. What is your sense, the kind of decline that we have seen in gold and silver from last Diwali, do you see it continue to the next Diwali as well? Do you see the same volatile moves there?
Yes, this has been, last 2 years has been a bad year for gold bulls, and we've seen a significant downside in gold and COMEX, and even with the Indian rupee appreciating, on India also we've seen a significant downside. Going forward also, we do not expect any meaningful recovery in gold prices, even though in last 2 months we've seen some upside. Gold has moved up from $1,180 to $1,250, but going forward, again the focus will be on US recovery. Again the focus will be on US rate hike. Since last 1 month we've seen some turbulent ride in US stock market, and everyone started to talk about the fact that US is not going to raise their interest rate even in the second half of 2015. I do not think so that is the case. Rates have to go up eventually, because this cannot go on and on for a long time. When you have oil prices lower, when you have consumer spending moving up, when you have a jobless scenario improving in US, then rates have to go up. So even though the demand, the physical demand, the jewelry demand improves in gold, but the factors, macro factors determining the outlook of gold still indicates that we are going to see a further downside in price of gold going forward during next year. So the maximum upside I foresee for gold futures on COMEX is still $1,300. I do not see gold moving about $1,300, and by the end of next Diwali, I see gold somewhere on COMEX settling at $1,125, $1,150. So gradual depreciation, a gradual decline in gold prices is something what we are expecting going forward in next year also.
And that would also mean decline coming in for the Indian prices unless, of course, the Indian rupee continues to hold at these levels or sees a bit of a slide down. Let's also get in then some global perspective on how the gold and silver prices are expected to be in the 1 year. Joining us for that is Ross Norman, who's CEO, Sharps Pixley. Also joining us is Marcus Grubb, who is World Strategy on World Gold Council. Thank you guys for joining us. Ross, you go first. And what's your sense on the volatility in gold prices, which has been high in the recent days as the prices react to various news and economic data points? Do you see the prices continue to trade in a similar way going forward?
Well, volatility has been a huge problem actually for much of this year, insofar as volatility and indeed volumes have been very light. That situation has reversed in the last few weeks, and indeed on COMEX, the New York Futures Exchange, volumes, the long positions are rising, volatility is rising, and with that also indeed the gold price is rising as we see some short covering. The effect of that is to take gold up to some resistance at 1240, but yet again, as we've seen for much of this year, we seem to be having some momentum fade, both the upside and the downside. Currently upside, but you know, the market's poised potentially for a break higher.
Ross, also the gold prices have seen some gains now for the past 2 weeks on the back of sell-off in equities, the weakness in US dollar, and there have been some concerns on the geopolitical markets. Do you see then prices sustaining the gains at least for the very near term?
Yes, it's quite possible. The long positions on the US dollar are close to records in living memory, and of course the short positions in gold are also equally have been at record lows. So you could say the bad news is already in the price, and we're starting to see some short covering in gold in the last few weeks. So I think the outlook that you might expect depends upon which narrative you're listening to. If you're hearing noises about the prospect of economic recovery, green shoots, the raising of interest rates in America, and some substance to the story about growth, then perhaps gold may well diminish. On the other hand, debt does still continue to mount. Debt instruments globally in 2008 were 69 trillion across all central banks and corporately. Today it stands at nearly 90 trillion. So clearly the problem hasn't gone away. So in looking for an outlook, you have to think, well, you have to decide which narrative you're listening to and make your choices accordingly.
Marcus, this one is your way. The gold holdings of the SPDR Trust, the largest gold ETF in the world, are down 44% from their peak in December 2012. They don't see any upside potential now from the current levels. How would you read into these numbers?
Yes, well, the bulk of those redemptions in the ETFs globally occurred last year. Overall, global physical gold ETFs lost about 900 tons of assets. Since the start of this year, the picture on the ETFs has been much better. We've had large parts of the year where you've seen new creations. In Europe in the last few weeks, you've actually seen more assets coming back into gold ETFs. So it's a much better picture than it was last year, and it's a more mixed picture. We've seen some redemptions and we've seen some accumulation of assets. But overall, if you look at the year to date, I think we're down about 65 tons in terms of overall gold ETFs compared to a loss of 900 tons last year. So, you know, I look at that and say those investors are now very happy to hold gold in their portfolios, and you are not seeing the same flow of gold out of the ETFs that we saw in 2013. I think looking forward, it really depends on the longer-term dynamic in the gold market. If we start to see the price move up again, then I think you're going to see more ETF creations again, which will help the gold market overall. So, you know, we're pretty comfortable with the picture in the ETFs. It's a significant improvement on the picture in 2013.
Marcus, what would you say? Is it a good time to invest in gold, or do you see further downside in the prices? Where do you see a strong support coming in, where the investors and buyers can actually come back into the market?
Well, it's a very good question, and I think, you know, we as the World Gold Council aren't regulated. We can't give financial advice. But I think what I can say is when I talk to investors now looking at gold, they say this. They say, well, gold is the only asset class that's reacted to tapering and a potential rise in interest rates. It's down 35% from its peak. It's down 25% over the last 18 months. You know, how much more downside is there for gold from here? And depending on what scenarios unfold from here, with growth, with inflation, with interest rates, corrections in other asset markets that look quite expensive. Bonds and equities are generally thought to look pretty expensive here. You could easily see the gold price recovering quite strongly from where it is now. So quite a lot of contrarian investors I talk to think actually gold looks very interesting, you know, in a world where you tend to look at the assets that have fallen 30%, not look at the assets that are very expensive and might fall in the future. And then I think the second reason why some investors are looking back at gold again, apart from valuation, is that the fundamentals still look very good for gold. Unlike a lot of the other metals, where there's oversupply and demand from China has fallen 30–40%, demand for gold in China and India is growing, and there's a lack of supply. Recycling has dropped in gold, and mine production is probably going to peak this year and drop into 2015, 2016. So there's a shortage of gold in the longer run. And I think that's really, I think that's the basis on which investors should look at whether or not they buy gold. Look at a medium-term view. Don't just look at the short-term issues around the futures positioning, the interest rate cycle, the rise in interest rates that's surely coming at some stage. The longer-term demand-supply picture is much more important. And that, for gold, looks very bullish.
Fair point that, Marcus, because the short term, of course, has seen some concerns, but longer time, the gold might see some contrarian investors coming in, as World Gold Council is pointing out. Ross, a final question to you. How would you look at the gold prices then from a long-term perspective, let's say next 3 to 5 years?
Well, that's central. That's key. I mean, an investor will take a longer-term view, unlike a speculator who's of the sort you might see on COMEX. The investors we speak to take the view that gold is like an insurance policy that you pay out the premium up in advance. And indeed, if the worst doesn't happen, you still get to keep the gold. If the worst does happen, well, gold's going to rally. So it's a win either way. And I think that's for that reason that they put some of their savings into gold.
All right, that's the global perspective coming in for gold then. Near term, yes, there are concerns, but start buying gold and silver for a long-term perspective up to 3 to 5 years. That's about gold and silver, of course, which have seen very sharp declines, but it has been a similar story or even worse when it comes to the energy space for 2014. Kunal, what's your sense with the kind of decline that we have seen in this month, the previous quarter in 2014? The crude oil prices, of course, have seen nearly 17% of a knockoff coming in.
2011 and 2012 was the year where oil supply started to move up, and we've seen an exponential rise in supply from US and other parts of the world. In spite of that, oil prices were holding to the levels of $97, $98. So if you look at the average of 2012 and 2013, that comes somewhere around $98 for the WTI. So we had a scenario where the supply was growing and the demand was going down or stable, and the rise in supply was so huge. In spite of that, prices were holding on. So this year we've seen prices dropping to the levels of $80, and suddenly everyone started to worry about, I mean, what's wrong going on? I mean, already crude oil prices are at $80. So from here, are we going to see a bounce? My answer to that is absolutely no. The excess, the froth in the oil market is completely taken over, and now the fundamentals are coming into a play. US oil production has moved up from 4 million barrels to 8.5 million barrels. In 2015, 2016, we are going to see this number somewhere settling at 9.4, 9.5 million barrels. So Iran is going to come up with 2 million barrels of oil. US is going to come up with further 1 million barrels of oil. So there is a major glut developing in oil market, and everyone started to talk about, since the prices are dropping, are we going to see a major production cut from US? The answer is no, because these guys have started these projects since last 2 to 3 years. Huge fundings have been allocated to start these projects, to run these projects. I do not see, even if oil prices drop below $80, the production is not going to get affected at least for next 5 to 6 months until we see a major correction in prices. So the view on crude oil from here is we are likely to see further decline in oil prices, and I won't be surprised by next 2 quarters if WTI settles down and give an average of $75. So the fact is, the world is going to see a lower energy prices, which the world has been waiting for since last many years. The artificial oil prices, the way it was moving up, it was purely artificial, and now it is coming back to the fundamental reality that the lower oil prices are real to the global economy, and for the country like India, it is definitely a boon. So $75 for the WTI, and I see by next 2 quarters, Brent settling at $80. That is our view on oil. So bearish on oil.
All right, so further declines not ruled out in case of the crude oil prices. Their very quick last word on the non-agro space with you now, Vijay. And what's your sense, or what would your best pick be when it comes to the base metal space for the next 1 year?
Manisha, I've been bearish on base metals in calendar 2014, and unless I see deep cuts even from the present levels, I'm in no hurry to buy base metals. So if you're talking about levels, I would like to talk about nickel, which I would keep on my radar if I get it at 866, 870 odd levels. When it comes to copper, I would seek buy opportunities close to 365, 370 and no, not earlier. Aluminium, if I do get at 110 or 12, I might just consider buying.
All right, so those are the strategies coming in for the non-agro space. With that, gentlemen, stay on with us. We will take a very short break. When we come back, we will talk to exchanges and we will also get you some money market check on the other side.
Presented by NSE, an investment called India. In association with Union Bank of India, good people to bank with.
Welcome to Smart Investing. Smart Investing is beating inflation through ETFs. Smart Investing is investing in some of India's best public sector companies through ETFs. ETF. Enjoy the future. National Stock Exchange.
Union Bank of India wishes you all a very happy and prosperous Diwali. Union Bank of India, good people to bank with.
हम इतना चाहते हैं कि आप बारातियों का स्वागत पान पराग से कीजिए।
ओह, पान पराग।
पान पराग।
पान पराग, पान मसाला, पान पराग।
जब भी करण दिल्ली आता है तो हमारे घर ही ठहरता है ना। इतना एहसान किया, एक किडनी तो मांग रहे हैं उससे। दो होती है ना सबकी।
एहसान मत लो, डिस्काउंट लो, वो भी फ्लैट 30% होटल बुकिंग्स पर, सिर्फ yatra.com पे।
A moment that lights up your life with 1,000 sparkles. A time of joy embellishing you with pride. A season of celebrating success with the finest life has to offer. Joyous greetings for a happy and prosperous Diwali from PC Jewelers. Wishing you all a bright Diwali and a prosperous new year. Vijaya Bank, a friend you can bank upon.
Force Traveler. Celebrate every journey.
Union Bank of India wishes you all a very happy and prosperous Diwali. Union Bank of India, good people to bank with.
Welcome back. And the commodity sector in last 1 year has seen a lot of challenges in sense of commodities derivatives in volumes and in the exchanges market as well. It has been a difficult time, but that seems to be improving, sorting as we head towards the next new year there. Let's also get in then Mr. P.K. Singhal with his view on the opportunities and challenges that he sees in the exchanges facing in the next 1 year to come.
No, I feel worst is over. In a time to come, basically everything is going to happen in a positive manner. As you are aware, now there is again talk of either passing of FCRA or merger of FMC with SEBI. If any of those things happen, this will again open lot of opportunities. Similarly, there is already talk of allowing foreign participants to trade on Indian exchanges and also to the banks to participate. Then similarly, FMC has already requested SEBI to make it mandatory as in accordance with the listing agreement, make a provision in the listing agreement whereby the companies will have to disclose that how much of their raw material risk or their finished product risk they have hedged. So that will again encourage the companies to participate in the Indian exchanges, and then also they have requested, FMC has requested the Reserve Bank of India that they should insist banks to encourage their loanee companies to participate in the exchanges. So all those things are of course long drawn process, but some start has started happening. So all those things are going to benefit the commodity ecosystem in a time to come.
All right, that's the joint MD of MCX, PK Singhal, saying that worst is perhaps over for the exchange, and they are looking at positive cues and feedback coming in from the government, and of course participation from more members and corporates as well coming into the commodity markets. Let's also get in a view then on the agro-commodity sector going ahead, and for that let's get on board Praveen Dongre. He's President, India Pulses and Grains Association, with his view on what really is the commodity sector looking out for in the next 1 year.
Yeah, next year, well, you know, the world, all commodities and so have agricultural commodities are in a bear cycle. So as I've said earlier, that there has been a downward correction in most prices, but we seem to have had a shortfall in planting as far as the Kharif crop for pulses is concerned. And our association estimates about 800 to 1 million tons of a lower harvest in Kharif. So we will have to wait and see what finally transpires. And then of course the major crop is the Rabi crop, and the major contributor to Rabi crop, which is almost 75%, is chana. And with the kind of realization that the farmers have seen last year, I think there will be an acreage migration to other crops which are more attractive and more remunerative, and we might see a distinct drop in the production of chana. So I think that the shortfall for the rest of the year could go above 1 million tons, and thereby markets which have corrected recently could trade higher for the rest of the year.
All right, it's positive cues for the agro-commodities as well for the coming next year. Then Kunal, what's on your board? What are you betting on in sense of agriculture commodities for the next 1 year?
One commodity which we are very bullish on is castor. Last year the carry forward stock of this commodity was 8 lakh ton. This year starting stock is just 6 lakh ton, so we have a 2 lakh ton of drop there. And production of castor seed last year was somewhere around 14 lakh ton, and this year it is expected to be somewhere between 9 to 10 lakh tons. So overall we are going to see a major shortfall in this commodity. So prices have already risen by 10 odd percent in last 2 to 3 months. But we foresee a major upside and major spike in this commodity. Castor prices are going to test levels of 5,200 to 5,500. And I think this is one commodity, most bullish commodity right now, which is trading on futures platform. The another commodity which we remain bullish on is turmeric. This commodity has a huge carry forward stock at this juncture. But going forward, the production of this commodity is likely to drop by 20 to 25%, whereas the demand is likely to grow by 4%. So turmeric looks very strong to us. By the next March, April, we are going to see this commodity somewhere trading at 7,500 or 8,000 rupees, which is currently trading at 5,800, 6,000 kind of level. So these two commodity are somewhere we are recommending the investors to put their money, and castor seed and turmeric. This two commodity looks very bullish to us.
So seed and turmeric is where you need to go bullish on. Vijay, what's your sense? Which commodity are you picking up in the agro space for the next 1 year?
Manisha, I'm bullish on sugar as a dark horse, which I will seek buy opportunities into in the coming Samvat year. Now, if I get NCDX sugar 200 to 250 rupees lower from here, preferably beyond the December futures series, which seems like a far shot at this point in time, I would be a keen buyer, and then would want to roll over these long positions up to March preferably, because I think the kind of developments that you have seen in the sugar space, sugar prices are likely to spike up in the coming 6 months or so. So I would play on that. The second one I would watch out for is chana. If I get chana sub 2,700 in the November or December future series, December preferably, I would seek buy opportunities there.
All right, so it's chana, sugar, turmeric and castor that you can buy in case of the agri space in the next 1 year. Let's also get in the currency view then, and joining us for that is Jamal Miklai from Miklai & Company with his sense on where he sees the rupee going forward. Jamal, hi and happy Diwali for you. What's your sense on the rupee now? What's your expectation from the government, and do you see the same choppiness continue in the currency going ahead?
The more investment money that comes in, there's been a lot coming in, the rupee naturally is likely to strengthen. Now the point is, I'm not sure we can really afford for the rupee to strengthen too much more. Partly because, as you see, exports are already beginning to soften. If there is a global event, it means global growth is slower, so exports will be more difficult. So one of the problems that we are facing is that the inflows are pushing the rupee weaker. The sort of natural need is for the inflows are pushing the rupee stronger. The natural need is for the rupee to get weaker to promote exports and keep us reasonably competitive. So that basically suggests that you will see volatility, right? Now the problem is the kind of volatility we're seeing. We're seeing, okay, right now the rupee is pressured, let's say 60.50 to 61.50 or 60.80 to 61.80. It's sort of narrow volatility.
Yes, Jamal, but what side are you bending really? Is it 58 that you're watching, or is it 65 that you see the rupee going ahead now?
I would say over the next 12 months, I'd have to say 58 to 65 as a range, you know. And my belief is that's still too narrow. You see, what is the problem is that companies are not hedging. They're not buying forward because it's very, very expensive. But if the market were more volatile, if it was more liquid, it would be more volatile, companies would hedge. But I think the two numbers you picked sums it up. 58 to 65 with a mean value of about where we are today, 61.50 or so.
All right, so that's the range the rupee can see going forward, between 58 to 65. Remember, we've seen a similar kind of range in 2014 as well. But with that, we will let you go. Thank you so much, Vijay, Kunal and Jamal, for coming by and giving us a sense on where the commodity and the currency market is headed in next 1 year. So those really are your best picks for rupee in agriculture commodities. Just let me repeat it for yourself. It really is between sugar, chana, castor and turmeric that you can buy. In case of non-agro space, the gold and silver prices still might see a decline, but the base metal space can give you some upticks in some pockets going forward. With that, a very happy Diwali to you, and continue watching ET Now for more business ideas.
Union Bank of India wishes you all a very happy and prosperous Diwali. Union Bank of India.